Happy Friday and welcome back to Live Lunch and Learn. I'm your host, Lambros Demos, and the topic this month has been Financial February, and I'm happy to continue that today. We started off the month with Jerry Hogenhut, a tax accountant and investment specialist, and he gave us his take on the Canadian investment marketplace. We also had RJ Stewart, the entrepreneur whisperer, and he gave us some great advice for small business owners and also talked about credit scores and credit repair. And today I'm really excited to bring in Konrad Kopacz. Konrad is a licensed portfolio manager and investment advisor with Echelon Wealth Partners. He has been in the financial industry for over 15 years and has helped over 200 families achieve their investment goals. So without further ado, welcome to the program, Konrad. How are you?
Good. Thanks for having me.
Yeah, my pleasure. My pleasure. So before we get into it, why don't you tell us your story? How did you get into the financial business?
Well, I was actually taught about money pretty early on as a child. My dad had some rental properties, and he always, valued the dollar. And so he was a saver, always invested. So kind of that education kind of came down to me, and I kind of at an early age was interested in the stock market. Like when the tech bubble was happening.
Right.
That's when I first kind of got interested in what's going on in the world.
Okay.
And
You got so you started dabbling in the stock market. You kind of got the itch for that kind of thing.
Yeah. So I mean, like when I was in high school, I was trying to figure out what to do as a career. A few friends went into accounting, engineering, and I kind of gravitated towards finance. And kind of the rest is history. And slowly it evolved to wanting to give advice from the things that I've learned, and continuously I'm learning all the time. So
yeah, and that's one thing. I mean, we share in common. We're both about educating people and teaching them, right? So that's what I really appreciate about you as well. So, and like you said, the rest is history. Today, you run a successful wealth management practice. Who is your typical client?
I mean, I would say we have two different types of clients that typically use our services. The majority of clients are like, people like you and me that, work hard, make money, save, want to invest for their future, either for themselves or for their kids. Maybe one spouse has a pension, another one has to do it themselves. So, I would say that's kind of like a typical middle class to upper middle class family that is doing pretty well for themselves. And then the other aspect of my client base is I have a lot of like entrepreneurs and venture capitalists as clients. So
okay, nice.
We actually do a lot when it comes to starting companies and bringing them public. So there's two different
nice
aspects of investing there, but
right. Yeah. So, I mean, that's good to hear because you're not only focused on stocks and things like that. You have other forms of investments as well that you can offer to your clients, right?
No, definitely.
Yeah, excellent. No, that's great. That's great. So, and yeah, I mean, if you're anything like me, when I tell someone that I work in real estate, the first question I get is, how's the market, right? So, I mean, it's a over-asked question. I'm sure you get the same thing, how's the market doing? So I'm not going to ask you that. But what I will ask is, other than that question, what is the most common question that your clients ask you?
Besides what's happening in the market.
Exactly.
I mean, I would say a lot of people ask, if I have enough to retire.
Mm-hmm.
I mean, it depends on the age, of course. The common question changes.
Yeah.
But I would say often is like, people in their 50s, 55, they're already starting to think about the later stages of their life, right? And unless they started actively saving and investing early on, most people have undersaved or, underestimated how much they really need in retirement. So I would say a common question would be like, can I retire?
Yeah.
And then we kind of, run them through like, a financial plan to kind of show them what they need to do to get there. And, the later in life you kind of start, those numbers actually look, pretty hard to attain the longer you wait.
Yeah.
You could Google and you could see, the power of compounding. Everybody kind of knows about that, right? That works in real estate, any sort of investment, right?
Oh,
The
100%.
earlier you start, the more chance you have at having something at the end that will help you retire.
Yeah, no, that's bang on. But the problem is when you're 25 or so, not thinking about retirement, right? It's only like you mentioned when you're like 55. This whole shit, pardon my language. It's like, I only have 10, 20 years left of working life, right? So, that's what they are thinking about. That's a great point.
So I like actually helping people, like when they're the younger clients that ask, how do I get to that next level, right? And I mean, like I kind of give them experiences from my own life of like how I kind of got to where I was. And so like giving advice in that retrospect is actually pretty important too, because then they realize, okay, what kind of steps they need to do. And I mean, a very common question is should I buy? Should I continue renting? I mean, it's a very common question right at the beginning of.
Yeah. And I think I'm glad you brought that up, because a few years ago, before the market took off, the real estate market, that was always the debate. Should I buy? Should I rent? Et cetera. Now with home prices, going through the roof, that debate has kind of been put aside, because they can see the value of home ownership, at least those who did get into the market. And I do want to ask you about real estate, because I know you also do some real estate investing. But before we get into that, I do want to also ask you, since we're talking about the stock markets, et cetera. I mean, obviously, there's so much craziness in the world right now, right? We had the Russian attack yesterday. We've been dealing with a pandemic for the last 2 years. We've seen, demonstrations, protests, lockdowns, tech sell-offs, all this crazy stuff. In your opinion, is this the most turbulent you've seen in the last 15 years?
I mean, I went through 2008 as an investor and a trader.
Okay.
And that seemed pretty turbulent. But like, maybe every year that you feel something, it feels like it's the most turbulent time. Okay. I know like there are a bunch of companies out there that have kind of made a list of, there was every year for the last 100 years, you could come up with 1 or 2 reasons every year of why you should invest. Like, like something that's happening in the world that could scare you. And I mean, though it feels very turbulent, and honestly, like, I mean, my prayers go out to everybody affected with
Amen.
In Ukraine, and like just war in general, because it's happening all around the world. And, sometimes people aren't getting the spotlight, but Ukraine's getting the spotlight because it just happened.
That's a good point. Absolutely. That's a good point. Yeah.
And I mean, I guess the repercussions of a potential World War III is a little bit more staring us in the face. I guess that's why it's kind of getting a little bit more traction in the media. But I would say that even though there is a lot of chaos in the media and in the world, but the media obviously feeds that.
Yeah. If it bleeds, it leads, right?
Yeah. You actually have to kind of look at the bottom line, the fundamentals, right? Yeah. And same with real estate as well. Like on the markets, you look at earnings, what are companies projecting? What are they currently doing? How's the economy? Jobs are an all-time, jobless claims are all-time low. Like things that show that the economy is actually pretty strong, even though in certain pockets it feels like it isn't. Mm-hmm. Like during COVID, how many people in the service industry, in the restaurant industry, just got absolutely destroyed and like I feel for that. But there are certain aspects of the market that are doing well. Like you asked a lot of professionals like yourself and me, we haven't been busier. Like it just keeps getting
That's true.
busier.
That's true. My industry has really like skyrocketed and done really well. Only the first about 6 to 8 weeks when COVID first started, real estate took a hit, but since then it's been on an upward incline. It's just been nuts.
And then that's basically like there's a lot of people that I talk to that are feeling the same way in different industries. That it's just business has never been better.
Yeah, that's right.
It's crazy to say that. But
correct me if I'm wrong. Employment is at near 100% right now, right? So we've, right. So
yeah,
it's
absolutely insane. But it's
like a paradox.
There's a pandemic. Yeah, there's a pandemic.
Yeah.
And I mean, though I know certain people that are not working still, but like, I mean, the sad part is this is actually creating a more divide, I guess, between the haves and the have-nots, which is another social problem that we could talk forever about.
Yeah.
But the economics, they still look good. So even with everything that's happening, they're looking good. With interest rates rising, and I know that that's probably going to be a question that you were going to ask is, I mean, it's contracting multiples in the growth sector, specifically tech, and tech has, people ask, oh, is it a good time to get in and so on. I mean, the tech sector has already fallen for the most part, like 50% since November.
Right.
So then you look at it as like, okay, can it go further down? Of course, no one has that crystal ball.
Yeah.
But are a lot of huge companies on sale? Yeah. There are. So there's always opportunity. When a door closes, another one opens.
Yeah.
And that's why you kind of have to.
No, that's great. I'm glad you brought that up because that speaks to the volatility of the market. So as an investor, then let me ask you, and I'm not sure if you can answer this or not, because I don't want you to put you on the spot. It's something you can't answer. But would it be more prudent for an investor to just wait it out and look at the ups and downs of the market, or try and say, like you just mentioned, tech's at a really low point right now, I'll buy more, and then when it goes high again, I'll sell it off, kind of thing. So what would you recommend to a novice investor?
So, I mean, there's so much I can say via like not knowing who the client is.
Okay, fair enough. Yeah.
But the thing is high level, I could definitely comment on that. So really, when we look at it as an investing for clients, is always about like, what are the risks you're willing to take, and what are you trying to achieve with that money, and how long do you have to withstand volatility?
Okay.
So really, it's like if you told me, it's like, and just as like, say you were a do-it-yourselfer, even if you told me that you have 5 years, 10 years in the marketplace, and you don't really care how high it's going to go, how low it's going to go, then you could approach it two ways. You could buy now, because in 10 years, unless we hit a Great Depression, you're most likely going to be higher.
Okay.
Or you could put it into pieces, like some people say, do a monthly contribution towards the market. So if you're unsure, you do just monthly. So you average.
So kind of like dollar cost averaging kind of thing.
Exactly. So obviously with inflation where it is, and that's also another topic we'll talk about. But the thing is because you don't know exactly where and how far things are going to go one way or another. I mean, we have predictions, but no one has 100% guarantee on anything.
That's right.
Is that you can slowly piecemeal into the market. I mean, it's definitely better than keeping in savings. And even Warren Buffett, that even the most novice investor knows who he is, will tell you that no one could time the market.
No.
100% of the time.
Yeah.
I mean, you might get lucky once or twice.
Sure. Even a broken clock is correct twice a day, right? Kind of thing.
Exactly. Yeah. And the thing is I kind of, like, even when March of 2020, when COVID first hit, like I went in a little heavier in like April, May, but I started with more conservative, and then I went a little bit more aggressive because I saw we started recovering. But like I couldn't time the bottom of the market, nor could I time the top.
I don't think anybody can. Great point. Yeah, I mean, you touched on two things: interest rates and inflation. So let's talk about that. We have an announcement coming up next week on the 2nd of March, and many people were expecting, or still are expecting, the Bank of Canada to raise the overnight lending rate. However, with with all the stuff going on in the Ukraine, I'm not sure if that's still going to happen or not. But if it does happen, what do you think that will be? How will it affect inflation? How will it affect the market?
I think at this point it has to happen. Like it's
Okay.
now, people talk about, is it going to be a double increase, right? To 50 basis points.
Yeah.
That I would, again, I don't have the crystal ball, but I would say maybe that's not as prudent, but they almost have to, because it's also, they can't have egg on their face saying that they're gonna try and slow down inflation and then all of a sudden stop. The market surprisingly hasn't free falled. Like it free falled yesterday in the morning, and then it came and then rallied. And then today, as we're speaking, a lot of things are in the green. So I think the most likely they will raise rates.
Okay.
And
And you think that's enough to curb inflation?
Not yet. I mean, because a lot of the inflation, like again, everybody has their own predictions. They use the word transitory and all that, all those gimmicky things.
Yeah.
I think supply chain is an issue.
Yeah.
Obviously, they printed so much money during COVID. That has to have an effect on something.
Certainly.
If you just keep it simple, that has to have some sort of effect. I think until we kind of get our supply chain in order, I think inflation is here to stay. Once we kind of get that sorted, will it fall? I think so. Naturally, it will fall.
Okay.
But the thing is it going to be elevated? And that's the real question, is how elevated will it be? Because the central banks don't have as much power as they used to. And I don't think anybody is going to endorse what Volcker did in the US and raise rates, where they went to like 20 plus, decades ago. I think if we raise rates more than 2-3%, I think a lot of people are going to feel hurt, specifically in real estate. I mean, I think, obviously, I don't have that crystal ball, but like, if we're just thinking about real estate and you're the expert, you could tell me, but we invest in real estate too, is, it might slow it down. Like, it should calm down the crazy bidding that's happening. And I'm already hearing a little bit that from mortgage brokers that they've seen a little bit of a slowdown, just a tad. But
I mean, real estate, since you brought it up, there has been this last week or two, I think there has been a little bit of easing off. The market was really hot in January and the early part of February, but now there has been a bit of easing off. How long that will last, I have no idea. But speaking of real estate, one of my favorite topics.
But let me answer that question though.
Yeah.
Like in my view, and again, you can give your opinion, is that, when I'm talking to clients, and everybody, clients are asking about this all the time.
Yeah.
Is, what's going to happen in real estate? And obviously no one knows.
That's right. Yeah.
Obviously everybody knows immigration is a big policy in Canada. That'll open up those doors again. But I think the madness might slow down as interest rates are rising. And if it does any harm the markets, what have central banks done? They've then automatically start cutting rates very aggressively. Yeah. So obviously I cannot predict where anything will go, but if they raise rates more than 2-3%, those $1 million mortgages, I mean, that's just like, imagine paying 5% mortgage rate on $1 million mortgage. That's $50,000 in interest.
No, that's right. That's a good point. Fair point. However, with the stress test, most people who hold mortgages now are getting stress test at 5.25% or 4.79 or whatever it was for the last few years. So, I mean, there is hopefully that cushion there, so that even if rates do go up, as you say, 2-3%, which I can't see it happening at least not right away. It's going to take at least a year or two.
But just because you can pay it, that doesn't mean you want to pay it.
Yes, good, great point. Great point. Yeah. So let's with all this real estate, these concerns that you brought up, do you think then, from your opinion, because I know you're a real estate investor as well for yourself, do you think it's still a viable option, real estate as an investment vehicle?
Well, 100%.
Okay.
Yes. Timing is a different story. And again, with real estate, I think you say, what's your time horizon? If you're looking at flipping, then I'm going to say, with rising interest rates and flipping, I don't know if that's the greatest idea of all time.
Good call.
If you're telling me I'm looking at buying my primary residence, my first home, and I don't overextend myself, but most people do overextend themselves on their first home, let's be honest, especially in these prices. Then you say, I could withstand this for 10 years. Then you only lose when you sell. It's not when, there's a dip in the market. Yeah. When I think the real estate market dipped in 2018, right?
Yes, that's right. A little bit, not too much.
I know, but it had those 2-3 months where it really fell off a cliff when it comes to crazy bids to normality.
Normality, that's right. Yeah.
And there's people that have lost a lot of money at that point, but guess who lost the money? It's the people that had to do stuff at that time. The people that just held through it didn't change anything. And it's the same thing with investing in the stock market. Yeah. If you're invested in the long term, all of this is just noise.
Yeah. No, that's a great point. I always recommend buy and hold strategies as well, especially in real estate. The great point. I'm glad you brought that up. So as a real estate investor, what do you look for in investment property? What would you be looking for?
So let's talk about for clients,
property.
For example, and I'll talk about myself personally, but I'll talk about clients.
Okay.
So, right now with clients, we don't invest in residential properties per se, like pooled residential properties. We do apartment buildings. We do invest in apartment buildings.
Like REITs and things like that. Right?
Exactly. But there's a big difference in owning a REIT in the public markets and in private markets.
Oh, that's right. Yeah, you also do private equity stuff too, right? Yeah.
That's right. So our team, my partner Justin and myself, we're very big on something called alternative investments. And if you Google that, you'll find a lot of different options there. But what that means is anything that really doesn't trade actively in the public markets. Mm-hmm. So to give you an example, and I'll tell you what I'm looking for, but to give you an example of March 2020, and I bring that up again, is that when all of a sudden people were worried about investors were worried about people not paying rent. That's what happened to the REITs that were traded in the public market? 30%. As an average, again, there's outliers always, but on average, I saw the REIT market fall 30%. Even though if they were collecting rent, it didn't matter. They all got grouped together and they all got hit. Yeah. Because we invest privately, they did not get hit. All you really had to worry about is the underlying business risk. You didn't have to worry about market speculation built into that business. Yeah. So when that was happening, all we're doing is we're researching, looking at, calling the different departments within the firms that we've invested in, and we're just getting weekly updates to make sure that everything is still on schedule. And the good part is when the one that is one of our heavily favored private REIT investments. I don't know what it is today, but I would say last year their average rent was $1,350, which is well below the market rent. And all they do is they bought buildings that were 3 to 6 story buildings, and they kept renovating them. Wow. And how they got around certain rent controls was, say there was a vacancy, they renovated the vacancy, and then they knocked on the door in the same hallway. It's like, hey, Mr. and Mrs. Smith, you could live in your unit that hasn't been renovated for 30 years, or you could pay an extra $300 to get a brand new unit. And so they found ways of how to entice people to want to move to a new unit so they can raise rent, disproportionate to the rent control. So like we look at stuff like that where, no matter what happens into the real estate market, say real estate prices get too high or they crash, people are always going to need to rent.
Yeah, that's true. That's true. Especially nowadays, right? Yeah.
Yeah. So we look at things where, we look at market extremes potentially, and are we protected? And can we get a good income stream from it? And so like we definitely preach a lot of private equity, private debt, not just in real estate, but like when March 2020 hit, people were panicking.
Yeah.
They're fully invested in just stocks. They were panicking.
Yeah.
Our clients, for the most part, did not panic. I mean, they panicked, but they didn't have to do anything.
Okay.
We didn't panic because we had time to reassess what is happening, what opportunities are there. And all we did was we started selling off some of our private investments that take months to liquidate. But by that time, you kind of figure out what's happening in the market, what's the noise, what's the truth.
That's right.
And we were able to take advantage of the dip in 2020.
So are your clients more focused on protection of capital or rate of return?
Again, the two segments, but so let's just say the average client.
Yeah.
I don't get phone calls when I make them 20%. I get phone calls when I lose 5%. So
yeah,
that is usually the case. And so when we try and educate clients, is one thing that we've kind of specialize in. I don't want to say perfected because you can always make it better, but let's just say we specialize in is we try and target 8 to 10% returns after fees.
Okay.
And take the least amount of risk to try and get it. I mean that's a simplified way of saying it. We're not trying to beat the market. Right. If you want to beat the market, you could just buy or stay with the market, and you're willing to do the volatility. Just buy a passive
ETF.
500 ETF, low cost, and don't touch it, which most people can't do. But let's say if you just do that and don't touch it, you'll get great returns, but you'll ride the waves.
That's right.
But our clients don't want to get heart attacks. They worked hard for their money. They just can't. They always fear that, what if this time is different? And this is why we kind of layer things that are not publicly traded.
That's right.
And real estate has been a great investment for centuries. I can't even say decades, centuries. Exactly. And in Canada, it's done extremely well. I know when I bought my first property, it was actually a 5-plex back in 2008.
Okay.
And I was looking at regular homes, and then I came across this 5-plex. I'm like, I could live in one of these, and I could have everybody paying my rent. And my realtor at the time, he's like, oh, the real estate has gone up so much. We expect a correction. And you know what? You could say that till you're blue in the face, but when you find a great opportunity.
Yeah, no, you're 100% right. I mean, our market here has this remarkable ability to hold its value, right? So even if it goes down a little bit, a few percentage points, it's going to bounce right back up, right? Like you said, in 2018, we saw a little dip, but now it's like doubled since then. The market is, so it's just nuts.
So what do you say when people like remind you of the 90s? Like, what do you say then?
Well, I mean, it depends on their question. I just tell them, yeah, we can look at the 90s, but it was a different time. Obviously, things are so much different now. And if you want to go back that far, we may as well go back to the 70s, and look at the last 40 plus years, 50 years. Yes, there's been up and down like the stock market, but the overall trend is up. So I'm going to go back to what I said earlier about buy and hold. If you're in it for the long term, I think it's a great investment. But if you're looking for a quick flip and just turn a profit, then that's a risky thing, certainly. Yeah. So we're on the same page there. We're just over 31 minutes now. I do want to ask you something that you may or may not deal with, but what's your take on NFTs? Because that's been in the news a lot lately as well. It's trending, I guess.
Yeah, I mean, like crypto and NFTs.
Yeah.
I mean, at the beginning, us advisors weren't able to invest in these sort of investments because it's like the wild, wild west. And as they became more popular, more and more firms were able to provide security to invest in these sort of products. So, I mean, even like crypto, you could actually buy it in your RSP, TFSA, regular account. You don't have to go and buy it from an exchange. But I mean, there's pros and cons of everything. NFTs, I think now is kind of like still like what crypto was maybe 5-10 years ago. It is still a little bit of the wild, wild west.
Yeah.
I would say that there's because I have one investor that probably has like 50 million in Bitcoin, and he invests in a lot of these things, and we talk a lot. And we invested in a startup NFT company as well with like those venture capitalist clients that I have. But I would say though it's the future, like the idea of being able to securitize anything, and that could be like smart contracts of like owning real estate. You could have it as an NFT, as like you own the contract. Everybody knows you own the contract. There's no way of forging it. But I think right now, like, people are kind of being taken for a little bit. And again, that this is just my point of view. I'm not saying.
No, I think you're right. It's in its infancy. There's going to be a lot of scammers out there.
Yeah, but from everybody that I've talked to in this is just like the amount of data required to be a real NFT. Yeah, you ever see those NFTs that are kind of like pixelated? That's most likely an NFT that's on the blockchain.
Okay.
All of these crazy looking NFTs that have like moving parts to them and are very detailed. That's basically, from what I'm hearing, it's a link to a JPEG, like or any sort of file that it's not really on the blockchain. All you're doing is buying a link, and that's technically not what a real NFT is all about. The whole technology.
Yeah.
So I would say that, just beware. Right now, everything is going up or going down. I know people that are like, I've heard of people scamming within there where like they list an NFT and a friend of theirs buys it, and people see like, oh, this is now a valuable one, and then they sell it to the next sucker, and you're left holding the bag. So that is going to happen a lot until it cleans up. A lot of celebrities are pitching, oh, this is the next best crypto or the next best NFT.
Yeah.
What people don't realize is all these people are going to get sued and are already getting sued. But the Securities Exchange Commission are going to go after all of these people. Like, for these pump and dumps. Like, you can't do pump and dump in the security industry. Like, why do you think you could do it in crypto and NFTs and get away with it? Like, they're going to go down hard on these people.
Right.
But it's
not regulated enough, you think? Is that why people are getting away with that?
Yeah, exactly. Just like I have to be a licensed individual to properly, give advice on securities, and there's huge regulations built into it and oversight that continuously monitors to make sure that I'm above board.
Yeah.
Right now, any Joe Schmo can just pitch anything on TikTok or whatever the case may be about crypto, YouTube on YouTube. So it's eventually, as it becomes a more mature industry, it's gonna get regulated. One, because the tax man wants their taxes.
Of course.
And two, protect the public.
Yes. Yeah.
And usually the pendulum swings too hard always.
Yes.
But it's to defend people that can't defend themselves. That's how the securities industry works. And a lot of people have taken baths in crypto and NFTs.
Yeah.
And though I think both are the future, still at its infancies, I wouldn't say not to buy it. I mean, like I have
Homework before you buy it.
myself. I don't buy the other ones just because I don't know enough about them and I'm not believing the hype. I think a lot of them will go to zero eventually. I just don't know which ones. I mean,
Yeah,
there's a lot more knowledgeable people than me that can't predict that either.
certainly.
So
I would have to agree with that, absolutely. And we have a very nice comment here from Karen Carrington. Thank you for holding these weekly informative sessions. I guess that applies to you as well. One of my great guests, especially this month. Thank you, Karen, for tuning in. Thank you for watching. Okay, so last question, Konrad, because I know you're a soccer guy. What's your prediction for the World Cup this year?
Canada all the way, right?
Yeah, that's right.
Well, I mean, we are planning to actually go to Qatar for the World Cup.
Nice.
So hopefully, I mean, yeah, a friend of mine actually played with Atiba Hutchinson when they were younger.
Yeah.
So, I mean, I hope Canada could do well. I mean, if they finish strong and qualify,
okay,
and they could get into the third seed in their group, then maybe they have a chance to get out of their group. But when it comes to winning, I mean, it's never anybody you predict. I mean,
certainly.
Yeah, I don't know. Like every time I think Belgium's gonna run away with it, somehow they don't because they have so much talent there.
Yeah, 100%. Yeah, cool. Okay, cool. That's great. Thank you very much, Konrad, for your wealth of information, pun intended. And thank you to the audience as well. Thank you everybody for tuning in. Have a fantastic day.
Thanks for having me.